Hey friends, and welcome back to Underdog Investing. Today I'd like to talk about Lemonade. Firstly, going through some news surrounding recent insider selling, and then I'd like to talk a bit about some good news surrounding institutional buyers, as well as the earnings that came out in the most recent quarter. And then finally, I'd like to finish off by talking about the stock price and what I'm planning to do with the stock. So before I jump into this video, I'll be very grateful if you could smash that like button and subscribe to the channel for future videos similar to this one. So let's start off with the insider selling. So Lemonade Director sells $2.67 million in stock. So this is an article from Market Beat. So I'm just going to go through this now. So Lemonade Director Becca Karen Seidman sold 25,000 shares of the business's stock in a transaction that occurred on Tuesday, March the 16th. The stock was sold at an average price of $106.8 for a total transaction of $2.67 million. So my first question was, who is Becca Karen Seidman or Seidman? So she is the chairman and CEO of Clear. So Karen led the acquisition of Clear in 2010 and along with co-founder Ken Cornick has guided the revitalization and relaunch of the company. And on Crunchbase you can see this just confirms that she is the chairman and CEO of Clear since April 2010. And in terms of Lemonade, she's a board member / advisor. So when they say director, it sounds more important than it really is. She's less involved than we thought originally. So she's actually more involved in Clear and she's just a advisor / board member in Lemonade. So that just gives you some context into the importance of this insider selling. And the second point to notice is how many shares she actually sold. So as you can see here, following the completion of the transaction, she now owns 25,000 shares of the company's stock valued at $2.67 million. So essentially she sold 50% of her shares and she still owns 50% of the shares. So she still owns 25,000 shares of this company. So I just wanted to clarify those two things. Now let's talk a bit about some good news surrounding institutional buying. So a large number of institutional buyers have recently added or reduced their stakes in Lemonade. So SC Israel Venture V Management LP purchased a new stake in Lemonade in the fourth quarter worth about $372 million. General Catalyst Group Management LLC purchased a new stake in Lemonade in the fourth quarter worth about $315 million. AXA SA bought a new stake in Lemonade during the third quarter, which is worth about $114 million. JP Morgan Chase, again, in the third quarter purchased about $82 million. And finally, Thrive Capital Management in the third quarter again purchased about $54 million worth of shares. So in total, that's about $1 billion worth of shares which were bought by institutional investors in the third and fourth quarters, so in the last 2 quarters. That's very significant if you consider the fact that we are a company with a market cap of about $6 billion. Institutional investors just purchased $1 billion. That's a sixth of the whole market cap of the company. Now this tells us one really important thing, and that is the fact that firstly, institutional investors are usually very conservative, and the fact that they are willing to invest so much money into a company like Lemonade, which is such a high growth company at its early stage of development, it just demonstrates their confidence in Lemonade in becoming a successful company. So this is a very bullish sign. Let's talk a bit about the earnings generally. So you can see that so Lemonade last issued this quarterly earnings, so Q4 was on Tuesday, March the 2nd, and they actually reported earnings of negative $0.6 per share. And if you compare that with the analyst estimate, they actually beat the analyst estimate by 5 cents. So the analyst estimated negative $0.65 per share. And in terms of revenue, they hit about $20.5 million in Q4, which was higher than the estimated $19.22 million. So that's some good news surrounding earnings. Let's have a look at some analysts now. So this is just some analysts in terms of their ratings as well as their price targets. So starting with JMP Securities, you can see they increased their price target from $105 to $130 and also gave an outperform rating. And this was on the March the 9th. You've got Zacks Investment Research, which downgraded Lemonade from hold to sell on March the 5th. You got Piper Sandler, who upgraded their price target from $105 to $163. So they're very bullish on this company. Gave the company an overweight rating in a research note on January the 21st. Bank of America are very bearish on this company, and they actually gave a underperform rating and a $29 price target, which is an absolute joke actually. Morgan Stanley raised their price target from $70 to $90 and gave it an equal weight. And you can see here that the average rating is hold and the average price target is $94.43. That's fairly decent actually, but just the thing I wanted to demonstrate, and the reason why I brought up this point and showed you this, is because you can see how these are all meant to be quote unquote professionals at doing their job at analyzing these kinds of companies. But the fact that there's such a big variation in the price target range just demonstrates how little they know about the companies. How could one professional give a rating of $29 and then another one give a price target, and then another company give a price target of around $163? There's just too much discrepancy in that just to say that one person is right, and it's just very unprofessional to me. The thing I wanted to mention as well is the fact that if you imagine a company like Tesla, there were plenty of people who were very bearish about the company, especially analysts. And the thing is, the problem with analysts is they don't actually have the time to actually dive deep into companies like retail investors like myself and yourself have the ability to do. I've personally seen hours and hours of interviews with the CEO, with the co-founders, Daniel Schreiber, Shai Wininger, with the CFO, Tim Bixby. I've seen all their interviews and I understand a lot about Lemonade and the company and how it works and how it makes money and how it's different from other old insurance companies. And I'm just not sure whether these analysts have the time to do that, because they probably have several companies that they need to do ratings on. So I personally think that this whole ratings and price targets is a load of nonsense. And I see the thing I like to look at is the long term. Where is this company going? What is it capable of doing? And with Lemonade, I think we're capable of massive things. If you just imagine the fact that we are an insurance company which are completely digital, and the thing is we are completely wiping out the conflict of interest that old insurance companies have, so we don't have any incentive to deny claims. Therefore, customers get their claims paid, and at the same time they have very good customer satisfaction. At the same time, we are actually reducing our loss ratios. And you might think that sounds counterintuitive, because how could we be paying more claims but at the same time reducing our loss ratios? And the way we do that is because we use so much data. We learn from the data we collect. Unlike these old insurance companies, we actually collect about 100 times more data. We feed it into our AI system and we learn how to balance risk, and insurance is all about balancing risk. And because we're able to do that, we basically reduce the loss ratio to the point where, so what we're essentially doing is we have a more superior product where we make customers more happy, pay their claims more, but at the same time we have lower losses. So this is just incredible. And the thing is, not only are we doing that, we are actually, because Lemonade don't need as many employees, they don't need buildings, they are able to penetrate different markets. So we're not just able to operate in Europe or or just in USA. We're able to penetrate different markets, for example, Europe, USA, maybe one day even Asia. So if you're talking about a $6 trillion industry, a $6 billion market cap is tiny compared to what we are going to be in the future. And we're clearly moving into lots of different sectors. So we started off in renters, homeowners, condo insurance, then we went to pet insurance, and then life insurance, and then I think we're going to go into auto insurance next. There's just so many things we can do in insurance. I'm very sorry, I wasn't supposed to rant like that, but I just wanted to put that out there, that Lemonade is definitely going to be significantly higher than where it is today. That's what I personally think anyway. So finally, finishing off with the stock price, just to reiterate my point, right now we're at $99 and $6 billion market cap. And if you take everything that I've just mentioned into account, I think you can imagine how large Lemonade can be and how undervalued they are. I personally see this company like how I'm pretty sure people who invested in Amazon before it became Amazon must have felt like how I'm feeling now. And there's a possibility that I could be wrong. There's many hurdles that Lemonade needs to go through, but I personally think that there's a possibility that we can reach that level where we're going to see massive returns if they are able to execute and penetrate different areas in terms of geographically, as well as into different sectors of insurance. The other thing I wanted to mention as well, just to finish off, is the fact that we are not only growing our customer base, but we're also growing our premium per customer. So what that means is each customer that is with Lemonade is actually the amount of money they're paying Lemonade is increasing throughout their lifetime. And the reason for this is because they're upgrading their life. So for example, they get a pet, they get pet insurance. They get a family, they think about life insurance. They upgrade to a house, they move from renters to homeowners insurance. And these all increase the amount of revenue that is given to Lemonade per customer. So the way I see it is not only are we growing vertically, we're also growing horizontally. So yeah, Lemonade has just so many things going for it, and I really don't think analysts are understanding how large Lemonade could be. This definitely was a lot longer rant than I expected, but I hope you enjoyed this video, and I will see you in the next one. And also comment down below what your thoughts are about Lemonade. Thank you so much.